FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and it's the last day of May 31st, 2016. Almost half the year is already gone. Well, are we going to see where half the world's credit goes as well? Well, Danielle Park of jugglingdynamite.com, great article written today. Global credit boom unwinding. Danielle, welcome. And hey, so the global credit boom, we've been talking about this forever now. So it's really finally here, starting to happen. There's no way that they can put it off another 6 months or a year through financial machinations. Is this it?
Well, I didn't say they couldn't put it off a little while longer, Kerry, because I mean, let's face it, trying to comprehend the lengths and depths of insanity that people will go to try and cover over the mistakes that have been made and not acknowledge them. I mean, who knows how long they'll be able to keep coming up with inflation schemes. But the reality is that everywhere in the world, there's a sea of change in the impression and assessment of central banks and their policies. And it's sweeping through all the political contests that are coming up in the world, you know, the Brexit debates, the US election rhetoric that's going on in Europe, all over. Spain's got a very important election coming up in June. And these things are breaking apart at the seams. These past status quo sort of options are no longer cutting it, because the fact is deflation's in control, and it's overwhelming all the inflationary efforts by central banks. And deflation, as you and I were talking about beforehand, is a function here, just as it was, frankly, in the Great Depression. It's this bulk of things and overcapacity in production, which were built up during the credit boom, let's say between 2005 in particular and 2008, and then 11 again on the rebound with QE. It's that period of time which created such excessive supply of everything. And that is the part that has to be worked down and rationalized back inside the box, so to speak. So as the world struggles through that multi-year period, deflation is the dominant theme. Fight to weaken currencies is the dominant theme. That chart I put on there is just Corey's chart of, you know, the reality that the renminbi, the Chinese increased their ratio to the US dollar as a way of weakening their currency. And they've done that now. So it's at the highest ratio since 2011, meaning they're fighting to sell their goods to America. And as they do that, all of the other competitors and countries that fight for that same market share want to do likewise.
Yeah. And so, but currency wars never work. They never win. Basically, the race to debase is a fool's errand, isn't it?
Well, you know what, though, Kerry, it is. But what's the alternative? You know, it's like if you're competing for a job and you succeed in getting one, then, you know, perhaps you do something to make yourself stand out, or perhaps you underprice your services or something. But if you get a job, at least you get cash flow, right? And the people who weren't able to compete for whatever reasons don't get the cash flow. So on a net basis, I think it's a zero-sum game, perhaps, but on an individual family, worker, household, and country basis, it's a legitimate contest.
Yeah. So on a net basis, it's a loser, but that's kind of like the definition of a recession or a depression, right? Recession's when you're out of work, depression's when I'm out of work. Or I always say the definition of minor surgery that other people have, right? If I'm having, you know, a toenail trimmed, that's major surgery to me. But if you're getting brain surgery, hey, that's pretty minor. Doesn't affect me in the least. But that is really a bad way of looking at things. It's destructive. It's counterproductive in the long run, but it feels good while you're doing it. But it's not a recipe for prolonged prosperity and success, is it?
Well, it's a clearing event. It's a market clearing mechanism. And that's ultimately what we need in this system. We've had the extend and pretend, protagonists who have run the system ragged over the past few years, both in the billowing of the bubble, credit bubble, and overproduction bubble. And now in the mean reversion phase, they keep trying to, avoid what needs to happen in terms of market clearing. And I believe the market clearing has the upper hand because of the sheer weight of it, and that it's everywhere all at the same time. So, it is part of the process. It's just kind of messy. It does it in fits and starts. And then you've got all these impetus to hoard and set aside product when people think prices are coming back, and then when they ultimately don't, or the gains are fleeting and they start to decline again, then you see a bunch more supply come on, and that pushes it further down. You see that, for example, with the oil rally. It's been this mind-boggling bounce that's happened since February, up more than 80%. It's incredible. But what you've noticed is that the production out of OPEC is back at the highest it's ever been in 2008. Iran is coming on stream, and the inventory that is floating off coast that has been just treading water, literally waiting for this price balance, have every incentive by each passing day to come back into market and try and sell into strength. So because of that, because that overcapacity and massive supply is always lurking, price gains can never be durable in the extent that the world wants it, in terms of banking on stability and progress and all that. It's always spikes and then flood the market with supply and people desperate for raising cash. And then you get the next plunge in the values again.
Yeah. So you think oil's headed back down then, huh? You think production's just too high and it's got nowhere to go but down?
Well, listen, with the world's, largest bankers trading it like wild things, you've got JP Morgan, and Goldman Sachs and all the usual suspects with both hands and feet. Manipulating, rigging, hoarding, every trick in the book. So who knows what can happen in terms of interim trades? It's already been absolutely breakneck. As I said, since February, but they can't ultimately control the demand side. And that's the nub of it. So they can manipulate. This is financialization, preoccupation with the things the world uses, but they can't at the end of the day drive how much of that the world is using. And that's where the system, again, starts to break down.
Well, if prices go down, then I might be more willing to take that long trip to grandmother's house across the country. And airlines cut their fares, so more people fly, and hence more petroleum is consumed, but that's at the margin, huh?
And don't forget, there's a heavy seasonal impact on this. We see this spike in commodities typically into the second quarter each year. We've seen that many times. We saw that in 2008, frankly.
Oh, yeah.
And then, and we've seen it with gold recently. Again, Kerry, there was great strength in the rally there, and now it's been losing ground again. So the US dollars rallied again during the month of May. The Canadian dollar has weakened, even as oil has risen. So again, the skeptics, the currencies seem to be agreeing with the skeptics here and saying, that the rally's overdone and it's sort of a speculative flavor rather than an organic supported by the economy. So we shall see, but the banksters are still firmly in control of financial markets. There's no question about that. Did you happen to see that interview with the attorney Helen Chapman, who's the representative of the Bernie Madoff victims?
Yeah. So JP Morgan Chase never knew anything about what he was doing, right?
It's an absolute farce.
Yeah.
It really is. They were collecting fees off the money. They could see that Madoff was collecting fees off the money. They knew he was advertising certain, 15% a year in gains, and they knew that he had no securities in the account. So at some point you can't, they were allowed to say they were willfully blind. They were allowed to say, oh, we didn't know, but that flies in the face of anyone that's ever worked in the business, who's ever been account custodian. It flies in the face of the regulatory obligations that say they should be paying attention to what's going on in accounts under their control.
Yeah, well, I can tell you a story. My friend had quite a bit of money with Madoff. His friend, who was a big mover and shaker on Wall Street, I mean, this guy is really like a household word, told him, said, hey, I would get your money out of Madoff, it's really strange because we have traders here, and traders are totally a mercenary lot, put it gently there, and they move from place to place, and yet we've never gotten one of Bernie's traders. And I don't understand that. They all can't be that happy. What's the deal? So my friend took his money out. It was a few $1,000,000. And when Madoff collapsed, he found out that he had $500,000 invested in Madoff through a feeder fund, through a hedge fund that he had no idea he was invested in. So he mostly came out okay, but it was on the street for many, many years, Danielle, that there was something fishy in Madoff land.
And Madoff was the sort of the throwaway bone, right? It was like throwing the dogs on the wrong chase. The big banks, Madoff was thrown out as a high profile, very sexy story, shocking example of fraud and embezzlement and all the nasty things that go on in finance. But he was a small fish relative to these bank-backed institutions that really control the world. And so the regulators were able to, hold him up as a, hey, look, we've got the bad guy, and deflect all the attention, frankly, away from the legitimate cartel, which is the people who move the dirty money around the world. And that is the big banks. An interesting thing, my son, who's 16, was recently in this, presentation fair for this program he was doing at school. And he had to do a presentation, and his was on the reinstatement of Glass-Steagall, go figure, and why it's necessary. And all the adults that came through, each booth, the kids would do their presentation. One was on air pollution, one was on, sex trafficking, one was on child brides, all these horrible, horrible topics, terrorism, et cetera. And he said, and every time the adults got to him, they said, oh, well, your topic isn't nearly as dark. And his comment to me was, oh my gosh, adults are oblivious. He said they don't understand that without this whole bank fraud, this system that perpetrates, deceit and the movement of dirty money, none of these other crime waves or sectors would have funding. And that it's critical. So in other words, that's been my experience too. People just don't comprehend. They dramatically underestimate the severity of what's going on here. And that's like Chapman saying in that article, in that interview, she wrote this book on it, jpmadoff.com, trying to point out how pivotal JP Morgan's role was, and how, Jamie Dimon is like the king mobster. And of course, none of the finance media wants to have her on or interview her. And
never.
That Maria Bartiromo Fox Business clip, as soon as she started talking about why she was on there and why she was suing JP Morgan.
We got an important commercial break. We got to go. Like, see you never.
Cut the mic, right? Nobody wants to hear it.
Yeah, well, that's, don't forget, people get their news now much differently than you ever got it before. And if you want to know the truth, you can somehow glean it from what's out there. So I think that's important to note, blog like yours and others, it is
and also,
out there.
I was you and I were just noting this book, Makers and Takers, I recently finished by Reina Fuhar. It's an excellent book, and it talks about the history of financialization, how it came to dominate as the main thesis in business in the United States, and how that then spread around the world. It's critical. The whole, contest of the bean counters versus the entrepreneurs, and the very fascinating, some other data I was looking at, Kerry, over the last 30 years, startups in America have been falling, and especially over the last decade. Startups, we know, are where the bulk of the new jobs come from in the economy. They're where all the vibrant entrepreneurial innovation comes from. And there was even Fareed Zakar of CNN was doing an article on, why is this? Why are startups falling? Why are we, getting these big multinationals dominating everything? And I think it's quite clear. It's, it's a complex thing. There's a few things involved, but a lot of it has to do with the monopolies and the rigged policies and the unfair play fields that have been allowed to evolve and dominate all the policy decisions and suck all the little businesses, out of communities because, they can't compete with these multinational globalization run by bean counters.
Yeah, well, there's another reason too. The government likes concentrated industries, easier to control, easier to regulate. When you had 35 different car companies, like at the turn of the last century, hey, it was very difficult to get a handle on it. But when there's only 3, hey, that's 3 checks you get every week, day, month, whatever. 3 companies you have to audit. It just makes the whole process so much easier from the government standpoint.
That's a chicken and egg kind of an argument, but I would submit that it's actually more that the companies like less competition, and the companies have a vested interest in becoming bigger and bigger and being able to control policy.
Yeah.
But from a taxation perspective, for an example, if you want a more stable or vibrant economy, you don't want 3 big customers because your tax base is so vulnerable and volatile. I mean, this goes back to, the book, High Beta Rich by Robert Frank, another friggin' excellent book. I recommend everyone read that. But he talks about how the concentration of business in a few large sectors and companies lead to a much more volatile, less stable tax base.
I couldn't agree more. But the government, I mean, who controls and runs the government now? I don't think there's any argument that it's basically a corporatist endeavor, our governance worldwide. Not just the U.S., not just Canada, but all over, not really geared towards competition. Otherwise, antitrust laws would have been much more strictly enforced over the past generation or two. So
absolutely.
This is
and then you
purely
get this top-heavy, rickety structure, right? Which is what we've suffered from today in the world all over. Not enough people with incomes that can sustain consumption, not enough innovation, very precarious, brittle economies that are predicated on the success of these 1 or 2 dominant players, which ultimately siphon money out through financialization and don't reinvest it in communities and workers and new growth for the future and savings, all these good things. So it's just a very unproductive mess. So it's not that capitalism has failed. It's not that, markets have failed. It's that they are no longer functioning in the way that they were envisioned originally.
Yeah. Well, yeah, there's a lot of reasons for it, and not all are conspiratorial. Some are just kind of evolutionary, the way things evolve, systems evolve over time. When you set up a new government agency to regulate something, for years, probably 30, 40 years, we've known this, that eventually that regulatory bureaucracy will suffer regulatory capture, meaning that the people that it's supposed to regulate will wind up running it indirectly or directly. And you just have to look at the FDA, the SEC, so many agencies, the whole insurance industry across the country, across the U.S. is a great textbook case of regulatory capture, where the regulated wind up making the rules to keep competition out. And you go back to the FDA, the Food and Drug Act. It put meat packers, smaller ones, out of business and helped enhance the position of the larger companies. So regulation by its nature is going to concentrate the economy. There is no way around it in its current form. So I think there's a lesson there. So moving forward, though, so we're going to have this wipeout where all the books, the decks are cleared, and right now it's kind of like going slowly, tentatively, but at some point it's going to pick up and become unstoppable, right? I mean, isn't that what we're looking at?
Well, and you get violent swings, which are extraordinarily difficult for people to absorb, whether it be the hedge fund industry, which is cratering and having a hell of a time this year in the last 12 months because of these violent swings, oil down 80% and up 80% in a matter of months. This kind of an example, when we see, and that's what we were talking about since 2012, really, with the iterations of QE and the way that they were disconnecting finance markets from the real economy and from sustainable revenue growth and that sort of thing. Another example is the new, legislation that the SEC is bringing out to require more, less pro forma, less adjusted earnings reports from the S&P 500 companies starting in Q2, Kerry. That's been another trend we've been talking about for the past few years, how they've been rigging their earnings numbers to try and beat, but their revenues have been continuing to contract. Again, this oversupply, this weakened consumer, this less people able to buy things, so you can only keep up the facade for a while. And earnings have been already falling since 2014, even with all the rigging and fixing that's going on. And now you've got a regulatory change, which is supposed to force people, if it's implemented, to be more go in more in accordance with GAAP earnings, and that will also undercut the earnings they're able to report. So now you've got this S&P 500 that has soared above revenues, has soared above GDP, and now is soaring above the earnings trend and as well as the expectations for growth in 2016. So at some point, that soaring is completely unsupported and it just crashes. And then that wipes out people who were, speculating and running the tables on that stuff. And that has knockoff effects in ways that you don't want to see too. But unfortunately, when you're on steroids like we've been the past few years, everything is violent in the way that it moves. There's nothing really organic or steady or stable or very predictable, frankly, in short-term moves. So that's why we watch a lot of the longer-term trends. And that's why I say the Chinese renminbi that we started talking about at the beginning, really peaked with the global manufacturing and demand cycle in 2011 and has been falling ever since. And when you look at those longer term trends, you realize the mean reversion has been underway now for several years. And all this violent trading in the meantime really hasn't made a whit of difference to the weight of the real world. And so I am heartened by that. And we watch with interest to see how much longer it's going to take. But it's definitely been in the works and continues to plod forward.
Yeah, no doubt. You are correct. And it's just a matter of time, but the eventual result, I don't think there's any doubt about. So, hey, check out Danielle's great work over at jugglingdynamite.com. Today's article, really good one. And as always, you will find a link to Danielle's site on the show notes to this interview on financialsurvivalnetwork.com. Sign up for our newsletter while you're at it. Danielle, we'll talk to you in a couple weeks.
Thanks, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.